project will be trialled in people from this Thursday.
Well, earlier this week, crude oil crashed below $0 for the first time. That's due to crippled demand and a storage glut. The demand for oil has dried up, of course, due to the lockdown restrictions globally. But what does this mean for the global economy, but also the African economy? We have several countries on our continent, like Angola, Nigeria, Equatorial Guinea, who depend on oil revenues for their sustainability. Well, joining me now via Skype is NJ Ayuk from the African Energy Chamber. NJ, good morning. Thank you very much for your time. You are the executive chairman of the chamber. Are you guys very concerned from an African perspective what is happening currently to crude oil prices and the likely impact on the economies of several African countries?
Yes, we are very concerned. It's something we have been at the forefront of. We were lucky to witness and kind of advise on some of the OPEC negotiations. African countries, when the Western countries have seen a recession, we in Africa, we see a depression. Nigeria, for example, relies a lot on oil revenue. So, and Angola and Equatorial Guinea and Gabon and Congo, and also North African countries like Libya and Algeria. So when you have a market crash of this magnitude because of demand factors and coronavirus and demand factors and low prices, it is going to affect people. And people should not just think it's going to affect a bunch of traders. No, it affects jobs. It affects everyday people. It affects people are going to lose a lot of jobs. And we are severely going to be hurt because even governments are not going to receive the revenues that they expected in order to target or fight the coronavirus as we see right now.
How do you balance the scenario where consumers benefit, like here in South Africa, from a lower oil price, and therefore they are smiling? Earlier, I spoke to market analyst Owen Nkomo here on eNCA, who said in South Africa we should expect about R2 less at the pump into the next month, hopefully. That's good news for consumers. However, how do you balance that with the need for countries to earn money?
I think it's not good news for consumers because what we strive for is to have stability in the market. The worst thing you need in oil market is uncertainty and volatility. So you need stability. Yes, you get a R2 break, but then what do you see? You see a market collapsing, so you see more jobs getting lost around South Africa. For example, you just got Total did a big discovery in South Africa of almost 1 billion barrels of crude condensate. If you combine it, you are not going to see that development happen because people are not going to invest. And that's the same with Mozambique and other things that you're going to move, whether you're talking about climate change, you're going to see about clean energy, you want to drive this project forward, you're not going to see capital drop in. So I'd rather give up my 2 cents, my 2 rands, and focus on having greater economic achievement and empowerment of a community. And that is what we're looking at right now. And it's not just about it's not just about two rands. It's the big issues. It is jobs. It is being able to have real development and develop gas infrastructure projects that we can move to power.
But NJ, where can the relief come from? I mean, for a country like Nigeria, Equatorial Guinea, Angola, for example, you mentioned Mozambique. Recently, they made some discoveries off their northern coast, just south of the border with Tanzania. Where can the relief come from? I'm asking this on the back of the fact that the World Bank, for example, has been asked or is discussing pausing debt repayment by some of these countries. And many of African countries owe a lot of money to the likes of the World Banks.
That is a big issue right now. The problem which we've seen around Africa is that when things are good, we forget when things were bad. We have to start managing our money right. We have to start looking at these natural resources and saying we are going to save for the rainy day. Right now, what we have to look from an economic perspective, we got to get into diversification and diversify out of oil and gas. But most important right now, you have to start looking at how government can kind of delay some of the tax collections, shore up the local companies so they can keep people working, because these are really difficult times right now. When you look at, you got families of maybe oil workers or in oil communities where they're on lockdown. they cannot do anything, and you cannot always just rely on the World Bank and the IMF to bail you out. We have enough resources that if we do it very correctly, just like I wrote on my book, if we do it correctly, we can bail ourselves out, because the revenues coming out of natural resources can really develop us and drive us. I'll leave you with this. China is 1.5 billion. They're shaping the demand curve of the oil industry. What about if Africa, almost 1 billion people, if we develop our infrastructure deficit and then we are using that gas and that crude, we will shape the price of oil, we will develop, we will power our manufacturing bases, and we will create more jobs. That is what we need to be focused on. With that, we will not need bailouts, because Africa cannot survive on begging or on bailouts. That is not a recipe for strong economic development of our people.
Thank